welcome back to another episode of Hoot and Poop. So I hope that you have enjoyed my whole series of Arqit video. Okay, with the last being on the management portion. Okay, so up to this point, I really hope that you guys have a better understanding on what Arqit is all about. And hopefully this will then help you to decide whether or not this investment does it make sense to you, does it resonate with you. Okay, so please take note, right? Just a disclaimer, I am a shareholder of Arqit, right? And my videos are purely for educational sharing purposes. It's not any recommendation to buy or sell. Okay, so now when I always research onto businesses or companies, right, I will always like to first understand what the business is all about. Okay, what's the technology, or rather, if it's not a technology, what do they sell? Where do they get their revenue from? And after understanding the business, the second part of it I will want to understand is, understand what's the for example, if there's any tailwind from the wider market picture, or for example, to understand if there's any competitors that is better than them, and so on and so forth. So basically, it's like, how I research is I first understand what the product is, what's the things that this business is doing. Then after I look at the wider picture, the whole environment. Okay. Then after understanding this whole thing, the next part I look into is the management. Who's the people behind the company. Okay, so because I always feel that, right, for a company to do well with longevity, okay, the management plays a very, very important role. All right, so this is something that I focus a lot on. And since Arqit, it's a kind of a new technology that is not readily available now. So the management, the directors, all these core people that contributes to it matters a lot to me. So this is why I focus a lot on management. Now, after you understand all of this, the last part of how I look at company is basically the financials. But for Arqit's case, it's because it's a spec company. So generally, I don't really have past financial projections to do my valuation. So what I can only do is to take on, okay, what they committed or what they have presented for during their spec listing, okay, to pen out some valuations that I have. Okay, so in today's video, as you all know, I will be talking about the financials and valuations of Arqit. Okay, so before I move into the valuation, let's try to understand the financials, right? Rest assured, okay, as Arqit goes on to start, talking about or rather releasing their earnings quarters, okay, that I will start to collate this and share my views with it. Okay, so looking at this, the financial projection, okay, Arqit projected that, by this year, their revenue is estimated to be around 14 million. Okay, it's not significant, but they, of course, if you want to track on a year-to-year basis, you can. But for me, basically as a long-term investor, I don't track them on a year-to-year basis so much when I do valuations. But of course, in terms of performance, I do track whether do they keep up to it or not. So it's like, so how do I see it? Is that valuations, okay, I track them on a long-term basis because I'm a long-term investor. But whether or not can the company hits their long-term goals, okay, every year, all these are like little milestones that we gauge them accordingly. Okay. Yeah, so if you would look at the financial projections in terms of the revenue, I just want to take note, or I just want you guys to know, is that in 5 years' time, 2025, they estimate that their revenues will be 660 million. Okay, so that's something that you have to take note of. Gross profit margin basically just tells you that, how much cash, or rather how much do they make for every of the products sold. So that's something that's good. Typically for software businesses, in fact, if you ask me, about anything more than 70-80% is really good. So 91-94, it's really, really, really awesome. Yeah, so that's something you have to understand. Okay, Other than that, that's nothing much. Of course, free cash flow, it's also something that we have to look into it. The higher the better. So yeah, this is something quite comfortable, quite good if they can hit. So a lot of things for financials in specs is that it looks nice, it looks perfect, all right, on the presentation itself. But we all don't have a crystal ball to clearly predict whether will they do it. But if they do it, all right, the big question mark is if, then all this looks perfect. Okay, so as an investor, this is what we have to, this is some form of risk that we have to take. So having said that, all right, I kind of modeled my valuation based on the 660 million revenue. So this is my so-called a free cash flow, a rather discounted cash flow valuation model. Okay, I'll just try to take you through to it. Now, in terms of risk-free rate, basically I put 20%. The reason is because this is more like an additional safety boundary that I set for myself for this case, because there's huge uncertainty in Arqit. So the higher the uncertainty, the much more margin of safety I want for myself. So I put a 20% of risk-free rate here. Now, in terms of share dilution, okay, because now Arqit is listed, okay, people can be buying them. So the more people buy it, right, the more dilutions will happen. So I just put a 3%. It's quite average. Usually it's about 3 to 5%. Okay. Now I will just leave out the base, all the revenues for now because it's late. I'll explain it later. Okay. So the growth rate decline, this is basically something that I just pluck out from the sky. Okay, but I will explain to you my rationale of plucking from the sky. Okay, now FDSO basically is just the so-called the total number of share counts. If you put it this way, is 144.43. This is based on their G20. It's based on their 20F that they have released. If you want to get the value, get the link to the 20F. In my previous video, I did talk about it, so you can pick it as well. Okay. So the growth rate of this is basically something that I guess so. Now the question is, okay, for the year, for the year, right, take note, because this is a forward projection. So I project it 1 year later. So 1 year later starts from 2022 and goes all the way until 2026. Basically, I always do a 5 years kind of forward projection. Okay. Okay, so my implied free cash flow margin is something that we need to. I expect them not to have any free cash flow for the next 3 years until 2023, right? And then they start to have some in 2024, and then reaching of about 30% in 2026. So that's what I do. The future value, present value, they are all formula, so it's nothing much. I just need to input a few things for you guys to know, because what happened is that whatever we calculate today, when we project it, all right, it's basically a future value kind of thing. We have to take into consideration of like inflations here and there. Okay, so for example, $1 today it's not the same value amount $1 5 years later. So it's same concept kind of things. Okay, so I want to focus now on the revenue portion. Okay, if you remember, right, based on what they committed, they said that in 2025 they expect their revenue to reach 660 million. But for my case, because I just want to be more conservative, I give them 1 more year to hit the 660 million. So which is why it's 2026 instead of 2025, what they committed. And because of that, I had to kind of extrapolate it back to the present time, which is like I have to pace their growth slowly, and which is why I derived to be a base revenue of 32 mil. That's why I told you don't focus so much on for this valuation model. Don't focus on my base revenue. Don't focus on my growth percentage decline. Whatever others is not important. What importance is that at the end of the day, they hit the 660 million by 2026 for my case. Okay, so after I modeled this out, okay, then my free cash flow, I also told you that I expect them not to have any cash for the next 3 years. Then you slowly taper up to 30%. I think 30% is quite okay, right? It's quite average, pretty average, and then the rest of it are all just formula. So now, if you look at this model, okay, there are many question marks, and it's normal to have, especially when you invest in specs, which is why specs has such a huge pullback previously, because the valuations are crazy. Right? There's no proper valuations being able to be done. Whatever we are doing is all future projections, and therefore, we need to be very, very careful and understand the risk to take as an investor. Okay, so for example, the first biggest question mark that I have is that what is their base revenue? Okay, if I put 14, okay, if I put 14 million, my growth rate, I cannot have a decline of 6%. I need to project a negative growth, a negative decline growth, because a negative decline means to say that their growth is growing on a year-to-year basis. So this is something that I have to toggle with and stuff. So that's something you have to understand. So this is a very big question mark here. The growth rate is also a very big question mark. It depends on how confident or how confident you are as an investor and stuff. Okay, and also the year zero growth rate, 100%, may or may not hit as well, because we wouldn't know, right? So this is what we have to take note of. Okay. Now, after my projection of 660 million by 2026, okay, you need to guess what's the exit multiple. I put a range of 40 to about 66%. The reason is because now this exit multiple is very subjective. There is no clear yardstick on how you want to do it. Typically for growth companies, you can put up to 25% to 45%, depending on how comfortable you are. The higher you put, right, the higher the share price is, the higher the intrinsic value is. So that's how we do it. For my case, why did I put a 40 to 66% here? It's because, number one, looking at the business itself, it tells me that Arqit clearly has a secret sauce to achieve global as well, rather limitless in terms of their outreach for quantum encryption. That's number one. Number two, quantum encryption based on facts and laws of physics has proven that at this present time, it is far better than our current encryption method, and it's unhackable at this time. Okay, it may be unhackable forever, but let's just be more realistic and at this time. So that's the second plus point or theory. The third is that quantum computing is up and coming. So if you read around, okay, that many companies are developing quantum computing. For example, ARQQ, another spec that has been listed. Microsoft, Amazon, Google, Honeywell, NVIDIA, all these are moving into quantum computing. Even Google also. So once big players are in, okay, they will push the adoption of quantum computing forward. And with the rise of quantum computing, it is easier to hack the current encryption method, and therefore in the long run, the current encryption method will not be effective anymore. So this is how I see it for the long term. In the long term, I do not know how, but I'm definitely sure it's not going to be within the next 1 to 2 or 3 years. It's going to be at least the next 5 years and above. So this is a long-term play that I am talking about. Okay, next is that, for example, all right, that's why I put this 40 to 66 times exit multiples. It's really a very big range. Okay, and of course, because this also derived to be about an equivalent of like price to sales multiples of 12 times to 20 times, so it's pretty comfortable here. Okay, so with that, with all these things being plugged in, all right, the rough intrinsic value is about $19 to $32. Okay, of course, this was as of, if I'm not wrong, this was closed, let me think, I think it was the price of 12th of October. Itself is about $14, but last night, rather 13th of October, the price dropped even further. Okay, so it's around $14 to $13 range. So based on my model, it shows that it is undervalued. Okay, but whether or not it's undervalued to you, it's a separate issue because it's purely based on how I model it for myself. Okay, so I hope that this video will allow you to understand rather go through my thinking process, and hopefully it does help you in some ways. Okay. Now, in my closing thoughts for this Arqit research, basically for me, I do have a significant position in it. It's not, I wouldn't say it's probably currently it's my second smallest position of investment. The reason why it's still not the main portfolio, main holding, it's because I don't want it to be, because it's still a spec. I still need to monitor it. Everything's all like promises as promises. It can goes both ways. It can go either under promise or over promise. So this is something that I want to monitor. I'm not going in yet, and I don't mind. The share price goes up and then I start buying it, because to me is that share price is independent of the value of the company. Okay, so if the value of company keeps increasing way more than whatever so-called valuation models that I have predicted, I'm fine with buying it. Even if I'm fine buying at $40, $50, if let's say, the share, the intrinsic value is like 100, example. Okay, but I'm definitely not fine in buying at now $13 when, after years of observation, the intrinsic value drops to like $5. Then it doesn't make sense to me. So this is something that, as an investor, we must be able to understand what we are doing, know what we are doing, right? Have a sound reasoning towards our investment thesis. Okay, so I really hope that you enjoyed this whole Arqit series. I'm not sure what I'm going to pan out in my subsequent other videos. Probably I may or may not touch on new companies, because for just to be honest, for researching on Arqit, it took me a month of every day's hard work to try to understand and try to read them. But probably I may continue to share more a little bit on Arqit to let you guys have a deeper understanding on what the industry is doing about. We will watch out and see. Okay, so I really appreciate a like and subscribe if you really enjoy my video. I'm improving every now and then, so if there's anything that you want me to improve on, please comment below and I will look at it. Okay, so with that, I hope you enjoy it. Invest safe.